Hi everybody, my name is Eli Segall. I cover residential and commercial real estate for the Las Vegas Regional Journal. Here with me is Gilda Perez-Alvarado. She is the global CEO of real estate brokerage Jones Lang LaSalle's Hotels and Hospitality. She oversees investment sales, debt and equity placement, strategic advisory, and asset management. She leads the group's global hotel desk, which is an investment sales team based around the world, in the Middle East, Asia Pacific, the Americas, and Europe. Over the years, she has been based in Madrid as head of hotel debt advisory for JLL's operations in Spain and Portugal. She was based in London, handling luxury hotel deals in the UK and other countries. And she's also been based in the New York and Miami offices of JLL, and you're currently based in Miami.
I am.
Okay. And prior to all that, she also spent 2 years and change with PwC in Miami. So we'll just jump right into it. As everybody here knows, COVID caused businesses around the world to close their doors and basically shut down tourism for a while. Overall, can you describe the pandemic's initial impacts on the hotel and tourism industries? And in terms of severity, how did that compare to other service sectors that rely on face-to-face interactions with customers?
So first of all, Eli, thanks for having me here. It's a pleasure to be in here in person and in the hotel. So just to answer your question, this was disastrous for the hotel industry. I mean, it was the first time ever in our history that the lights were literally turned off. And it happened from one day to the next. And so as it relates to the importance of our industry, I mean, hotels, hospitality, tourism, we employ 10% of the world's labor force. That shut down from on the flick of a button. So it was very hard. The good thing is that now we're starting to see, some good news coming out from some markets who have reinvented themselves or have benefited from many different factors. We're finally starting to see the recovery of our sector, but it has been very, very difficult.
At least initially after the pandemic hit, what happened to the pipeline of sales and hotel construction projects that were in the works?
It shut down. So basically everybody retrenched. We didn't know if this was going to be lasting for a few weeks, a few months, 20 months later. We're still living through some of it right now. So everything stopped, and there were some transactions that we were working on that did go through. The buyers had conviction on it. Maybe they didn't think it was going to be very severe. Others said, you know what, let's just hold off. Let's hold off on buying more properties, and let's just go ahead and do asset management, focus on our existing portfolios. Obviously, there was a lot of issues that needed to be addressed, labor predominantly. But keeping up a building is very expensive. Keeping up a hotel building is very, very expensive. So we had a shift in terms of investors who immediately didn't feel like we needed to go acquire more properties. Let's focus on what we have and let's do the right thing for our properties, for our people, for our investors.
Were some countries affected more or less than others when it came to how many deals just fell apart or how many construction projects got canceled or delayed?
I would say, this pandemic hit everybody the same, pretty much. I mean, the way initial, okay, so the world shut down at once, and we've seen some markets get ahead of others, some markets reinvent themselves, but it all has depended on policy, right? On any restrictions on the movement of people, on the speed of vaccination. So it's basically been a government response, which has dictated who comes ahead versus others.
What about with hotel mortgage delinquencies? At least initially, maybe the first 6 months of the pandemic, were you seeing just waves of defaults or workouts with lenders, or were hotel owners, maybe they didn't need that, they were okay?
What was really interesting, we saw the biggest wave of delinquencies we've ever seen in our sector. In fact, it far exceeded the prior crisis. The difference, though, is that, and we were talking about this earlier today, we have had the most accommodating environment in the history of our sector. The lenders were accommodating, the governments were accommodating, the brands were accommodating, the operators were accommodating, the landlords were accommodating. No one wanted to get the keys back and have to deal with the realities that the owners were dealing with.
Because that did happen a lot about a decade ago after the
It did.
financial crash.
And if you think about it, unlike other crises, this is not a liquidity crisis. People have money. The consumer has money. They have the willingness to travel, to stay in hotels, to pay, to do everything. There's investors out there who actually want to get into the sector now. So one of the questions that we always get is, okay, people retrenched. Have you actually lost investors? Are people not wanting, are there investors not wanting to get into the sector? Do they want to leave and switch? And the reality is, all of the existing investors stayed, and then we got it. We have other investors who invest in other commercial real estate who said, you know what? We've seen glimpse of recovery. We know the amount of demand that is out there. We know how many trillions of dollars in savings there's been. And so demand is not the issue. It's travel restrictions that are the issue.
I know after the last crash, at least in Vegas, there were casino companies that filed for bankruptcy or came very close to it. Multiple big resort projects were just halted, that everyone walked away and they were just left there abandoned. Did you see that kind of systemic crash this time around as well?
We did not. I think it was ingrained in our memory that maybe some sectors are too big to fail. Okay, and so because it was so accommodating, we didn't see that wave of distress that we were all expecting. I mean, when the lights turned off and we saw what happened when we were all confined to our homes, obviously we couldn't believe what was happening, and we thought immediately with all these waves of debt delinquencies that there was going to be a bloodbath, and it wasn't. Again, people were very accommodating and said, we will work with you, we will make sure that maybe you don't go bankrupt. Now, what is happening is we will definitely, Eli, see stress transactions take place in 22. We're definitely going to see more transactions come up. Maybe the owners are saying, out of these 10 hotels, 3 are not core, let's move those. There are markets where pricing is far exceeding, transaction prices are exceeding 2019. Maybe it's opportunistic for me to sell right now. So we will see more trades. We will see more potential stress situations come up in 22. Now that we can see with markets opening which businesses work and which businesses do not.
Among the major U.S. tourism markets and destinations, which cities were hit hardest by the pandemic? And which ones were hit maybe not as hard as some people might have expected?
Yeah, for sure, that's a great question. And the cities that were hit the hardest are those that are predominantly dependent on group demand and corporate. And so, we've seen how dizzying this whole get back to the office movement has been, right? Corporations saying, you know what, we're gonna get our workers back in the office in the summer, then it was the fall, some are in January, some have said, you know what, forget it, now everybody can work remote. That is very difficult in terms of trying to prognosticate what corporate demand is gonna look like, number one. Group demand, when you have, obviously these waves, these surges in new COVID variants, don't help. So we were talking about it earlier, you and I, are people going to feel comfortable going to a multi-thousand people conference in a place like Las Vegas? So obviously those markets are doing maybe a little bit more poorly than other markets like Miami and Austin, for example. Nashville, they're doing very well. So those markets that have predominantly leisure demand, they're going to do very well. But not only that, cities that have invested in infrastructure, that have reinvented themselves from a corporate occupier perspective. I mean, just look at Miami right now, and I'll spend time on it because we're here. Miami's now become a tech hub, right? Obviously, there's a lot of finance companies that have moved from the Northeast down to Florida and to South Florida specifically. So the city has reinvented itself. It's remained open. Government policy has helped. And it's a leisure mecca, so it's doing very well.
How do tourism levels right now across the country? I'm sure vary city by city, but overall, how does it compare to pre-pandemic levels? I think it seems like domestic travel is going crazy, but the convention industry is only now starting to reemerge from the pandemic. International travel has faced a lot of restrictions. Can you give us a sense of just overall how tourism is doing?
You've hit the nail on the head. Listen, we're not yet recovered. We're far from that. Markets worldwide that are very dependent on domestic or intra-country travel have done very well. Mediterranean has done very well. The Smile States in the US have done very well. So domestic demand is there. To your point, those markets that rely on convention, they're not doing very well. Those that rely on international, it's not that people cannot come to the US, it's that there's restrictions that are very cumbersome, confusing. Maybe, a traveler doesn't want to get stuck, or maybe it's easy to get here, but when they go back home, like take a place like Hong Kong, maybe you do not want to quarantine in a hotel for 21 days.
What about hotel construction? Are you seeing new plans being drawn up even now? New properties getting built, more groundbreakings, that sort of thing?
Not to the same level that we had pre-pandemic, to be completely honest. There are projects that are going through. I mean, you look outside the window, there's a lot of cranes going on, most of them residential and some office. There are some projects that are getting done, but what's the hardest thing to come by right now? It's there's many headwinds for construction. One is lenders. Maybe, the appetite for construction financing is not there by the traditional lenders. Alternative lenders have come into place, and maybe they are interested in lending in some projects depending on the sponsor. 2, we have supply chain issues, and 3, labor. So no, we're not seeing the same level of construction that we were seeing before. What is really interesting though in our sector is we are seeing new hotels come up, but they're coming in hybrid form. So they're part of mixed-use properties, and most of them have a residential component to it.
What about with sales? Again, I know just speaking, since I live in Vegas, we've had several multi-billion-dollar casino sales, often through these sale-leasebacks with buyers like Blackstone. Are you seeing more hotel and resort sales globally? And specifically, are you seeing more of these sale-leaseback transactions?
We're still quite depressed from a transaction volume perspective relative to 19. Obviously, we've seen a very significant improvement over 20. The assets that are transacting the most are resorts and luxury properties, especially those properties that are located in markets that are doing very well, like Miami. We are seeing some investors take a contrarian view and maybe go back to San Francisco, New York, Chicago, or Boston and say maybe it's time for me to come in here and acquire property at a little bit better pricing. But to answer your question on sale and leaseback, those are not very popular in the US. In Europe, this is kind of transaction du jour. That's the most common way of doing a transaction. I think it's a brilliant trade. It's a great bet on the sector, a great bet on the market. Maybe we get to see a little bit more of that happening, but to be honest, Eli, most of the sales in the US related to hotels are either vacant possession or a sale and manage back or a sale and franchise back.
I was going to say around the world in the countries where JLL operates and then you oversee. Which countries are seeing a lot of hotel sales and construction right now?
Hotel sales for sure along the Mediterranean. So Spain is on fire right now. And it's really interesting. And so we're seeing a lot of Europeans invest in Spain. You see there's quite a bit, there's very robust capital markets in Spain itself. So there's a lot of Spanish investors investing in Spain. And then we're seeing right now a wave of Latin American investors also go into Spain. And what are they chasing? Cities that have transformed themselves, like Madrid. It's repositioned itself as a luxury destination. And then along the coast for those properties that are doing very well, because they're doing sun and sand, similar to what's happening in Florida. So that is doing well. We're seeing, a future, some trades happening in key markets like Paris and London, forever markets that, will continue to attract global capital.
Also, throughout your career in real estate, what period of time did you see the most hotel construction, and do you think if we're not there now, we'll ever get back to that?
I would say, let's see, the last cycle we saw a ton of new construction. I would take a market like New York City, compare 2007 available rooms to what the number of rooms was in 2019, and it was night and day. I mean, supply just went like this. I think what you're going to see going forward is, it depends on the city, but you're going to see new construction, you're going to see more mixed use. You're going to see a lot of renovation and retrofitting. You and I were talking about ESG, the environmental social governance movement that is happening right now, and people who are very conscious about their carbon footprint may say it's probably better for me to take an existing building that is very well located, retrofit it, reposition it, and take it to the next level than starting from scratch and building new in a location that maybe is not straight.
How long do you think it could take before tourism and conventions are back to pre-pandemic levels, and what do you think is needed for those industries to get there, if they ever will?
I think they will get there just because demand is not static, right? So demand is growing, there's a growing middle class, there's a lot of savings, there's a lot of wealth that was actually created during the pandemic, which is really interesting. So demand will come, and it will exceed what demand levels were in 2019, okay? I'm sure of that. How long it will take will depend on vaccination, which you've seen it's picking up, which is good, and then what government policy is as it relates to the movement of people.
As of today, as of now, how are the big hotel chains doing financially when you look at their, the financial results like Marriott's and Hilton's and those sorts of companies? How are they doing right now?
I think they're actually feeling pretty good, all of them. They made some very smart decisions at the beginning of the crisis. All of them were actually very proactive in terms of how they were working with their owners, how they're thinking about growth. A lot of these companies, because they're global, obviously, they rely on growth in markets outside the US that maybe did pretty well. So that is interesting. And then what I like about what we're seeing with these hotel companies is there's actually a lot of innovation that is taking place. So you're seeing a lot of these luxury hotel companies, for example, are now growing through branded residential, right? Or they're doing something else above and beyond just building the same traditional hotel.
I know you touched on this already, but since we're here, how is the Miami tourism market doing? And you alluded to already with all the hotel construction. What kind of projects are being built? And how does the construction pipeline now in Miami compare to what they saw in prior years here?
Listen, construction in Miami has always been here. So this is a market where, we're always seeing cranes come up. I think we're in the neo-renaissance of Miami, to be honest. And again, it's not, Miami as a destination is evolving, and also as the city itself is evolving. It's welcomed a lot of migrants, if you will, like me, coming from the Northeast, coming from the New Yorks of the world, who are now establishing their companies here and growing here, so that's interesting. You have quite a bit of diverse talent in Miami, which is very attractive for companies that are looking, paying close attention to their DE&I policy or initiatives or goals. Then you have amazing connectivity with 2 airports, an amazing port, cruise port, commercial port. So Miami is going through its next reinvention. And if you look at the type of product that is being developed, is actually excellent quality, and there's a lot of luxury that is coming into the market, attracting again domestic and international, and also supporting infrastructure that is being built, which is great.
Are there any elements that you think of the tourism or hotel real estate markets that might be permanently changed because of the pandemic?
I think so. I think we need to pay attention at consumer behavior going forward, Eli. To be honest, a lot of us have become a little bit of, kind of professional nomad, digital nomad. We're very, very flexible. How we use technology has also evolved, I think, for all of us over the last 2 years. So from a hotel perspective, it is important that when you're thinking about your stay or your offering, you're thinking about how people are going to use the room and how they're going to live in your building. That's important. Also being a little bit more values and mission conscious is important for the new consumer, especially when we're talking about economic impact, environment, carbon footprint. That may resonate with some guests. And then also there's a lot of money chasing this sector. So we will see a lot of transactions take place. We're seeing a lot of investment take place, and let's not forget about technology, how it's transforming everything. So
I'm just curious, when you look back to when the pandemic first started, do you remember what hotel developers or other brokers, what they at least initially thought how long this crisis was going to last and when things would get back to normal, so to speak? And then when do you remember that there was a point when you realized this is not ending anytime soon and it's only getting worse?
I think it was really difficult for all of us to think about when we were going to come up for air. I'll give you an example. I was in New York at the beginning of the pandemic. I left New York on March 18th. I packed for 4 weeks. I didn't go back to New York in 15 months. So, that's just my own personal experience.
Where'd you go?
I actually went to Central America. I went to Nicaragua. So, and then I settled in Miami. But, like me, there were others. We didn't really know what we were going to do. So what was important for us, and I think every business was, make sure we were basically securing our positions, right? We took care of our people, we were taking care of our clients, we were making sure we were making the right financial decisions for the long term. And then I think it would be such a waste of time if we didn't take this last 20 months to reflect and reinvent ourselves and think not about just the next year, the next 5 years, but the next 20 years and beyond.
When did you start realizing that, start noticing that the pipeline of deals, at least at JLL, was starting to pick back up again?
I would say it's all happened probably since the middle of this year. It's really picking up, which is really good.
But it took over a year to get there.
Oh, yeah, for sure. Yeah, and again, a lot of our clients, we don't just do sales, we do quite a bit of asset management, for example, and consulting advisory. We were very focused with owners of existing hotels and portfolios and, helping them figure out ways to, basically keep their investment safe.
I think that's it.
Thank you very much.
Any questions for Gilda? People here now?
What do you think about this hotel?
I think it's a very beautiful hotel, and the pool was awesome, so I wish we could be there right now.
We will be at 5 o'clock if you want to come back to 7.
Thank you very much.
So hang around, we'll go to reception at 5. You were great.
Thank you. Thanks for having me. Appreciate it.
Do you see more additional trends developing the Airbnb model disrupting traditional hotel brands and inventories?
100%. Anything that has to do with co-living and, the blurring of the lines of residential and hotels, that is the next biggest wave coming forward. So if we thought Airbnb was big, I think we're in for a very big surprise in terms of what's coming.
Any other questions?
That was actually what is coming.
Sorry.
What is coming?
Listen, basically, I was in Europe for the last 2 weeks, and we were talking a lot about co-living, for example, right? And co-living being kind of a mix between residential and hotels, right? And then having a very interesting technology offering, combining co-living with co-working, and basically just using space in a different way. There's a lot of new companies that are, coming up. Obviously, Airbnb continues to evolve, but you get other companies like Casa, Sonder, for example, which kind of blur the lines between short stay, long stay, a hotel stay. And so I think that that's honestly what is coming. Just a more tech-oriented and residential investors that are looking at hotel spaces and saying, how can we add additional flexibility? And so that is what is coming. And, thinking about a restaurant not just as a hotel's department, but let's bring in a professional food and beverage operator. Let's activate the space. Let's also have a co-working space, because now your hotel guest is not just a paying guest who's using the room. It could be the neighbor. It could be, maybe I don't want to be in the office because I find it boring. Maybe you and I are doing a meeting at a hotel going forward. So I think we're definitely going to see more innovation come into the space. And, we're spending quite a bit of time with tech companies that are looking at getting into hotels like an Airbnb did in the day. And make hotels more efficient, more dynamic, and again, blur the lines between residential and hospitality. So that's what I refer in terms of what's coming.